Hello everyone, myself Dr. Vinayak Gandal from KFC College for Police, and today I'm going to talk about buyback of share. Dear students, in this video lecture we will discuss about meaning of buyback, its effects, its various objectives, and some legal provisions as per Companies Act 2013 with relation to buyback of shares. Even we are also going to study about the accounting provisions with relation to buyback of equity shares. Okay, so normally buyback means the buying back by a company of its shares or other securities from their shareholders. Buyback of shares is also known as shares or stock buyback. Normally, a company limited by share or company limited by guarantee and having a share capital can buy or purchase from its shareholders the shares issued by it at a certain price. So the procedure of getting back the shares from existing shareholders of the company at a certain price is called as buyback of shares. So when company bought back equity shares from the shareholders, then it may affect the business organization. Even the buyback of shares can affect the entire structure or capital structure of business organization. Okay. In short, it may be said that buyback of shares means getting back shares from the existing shareholders of the company at a specific price. Okay, now we are going to study about meaning of buyback. So dear students, normally company may issue n number of shares for the purpose of generation of funds. So if company issued shares to the person are called as equity shareholders. So equity shareholders are the person who is holding some share in the company share capital. If company wants to get back some shares from the shareholder or due to various reasons, sometimes company may get back all these shareholders from their shareholders. The entire procedure of getting back the shares from the shareholders is called as buyback of shares. Okay, the buyback of shares may affect the entire structure of business organization internally as well as externally. So it is must for all of us to understand the some effects of buyback. So dear students, there is a reduction in share capital to the extent of the face value of the shares bought back. So when company get back some shares from the shareholders, the share capital of that company has been reduced or will be reduced to some extent. Okay, so buyback of shares may affect the share capital of the company. Second, that is, there is a payment from the company to the extent of the price of the share paid to the shareholders. Means when company gets back some share from the shareholders, then company have to pay certain amount of money to the shareholders whose shares got back. So in this case, Company need to make payment to the shareholder, so there is a change in cash position, or it may affect the cash balance of the company when payments are made to the shareholders on buyback of shares. Okay, in the case of buyback of shares, normally name of shareholders are removed from the register. Means the shareholders whose shares are bought ceases to be the shareholders of the company. Their names are removed from the register of members. Okay, so these are the some effects which may undertaken if company adopted the method of buyback of shares. Okay, in short, there are some effects of buyback on company structure, like shareholding pattern of company may change. Even another effect that there is a chance of improvement in financial ratios of the company when company adopt buyback. Some effects may also undertake on shareholders. Shareholders may get tax benefits, or shareholders may get higher price from the company on their shares, because normally buyback of shares is undertaken always at a higher prices. Okay, dear students, now it is necessary for all of us to understand various objectives of buyback. Generally, the question may arise in front of all of us: why buyback is undertaken, or what are the objectives of or purpose of buyback. So now we are going to learn about some objectives of buyback. The first objective of buyback is to increase the intrinsic value of the shares. Normally, if company wants to increase the normal market value of its shareholders, it is the best way to undertake the method of buyback. Okay. Second objective is buyback is must to increase earning per share. So if businessman or if person wants to increase EPS, the company can use the method of buyback of shares. So in such a case, if shares got backed by the company, the share capital can be reduced, and in such a case, EPS may be improved or increased. For reducing the excess share capital, it is the best way to use method of buyback. So to reduce excess share capital is another important objective of buyback of shares. To use surplus cash. Okay, so the surplus cash being use of surplus cash being idle in the business. So whatever surplus cash is available with the business, if company wants to utilize such a surplus cash, they can use or adopt the method of buyback of shares. Okay. Another objective, that is to increase shareholders promoting or the present management. If company wants to increase shareholding of promoters or management in the company, they can bought back the shares from their existing shareholders. Even buyback is undertaken to prevent takeover attempts. Normally, in the case of, uh, for example, if company suffers heavy losses from year to year or due to many reasons, company may adopt the various methods of like amalgamation, absorption, merger, takeover. Okay, so in that case, if company merge or combine or absorb or amalgamated, then the existing companies may wound up or dissolve. So, for avoiding dissolution or for preventing such a takeover attempt in the company due to loss or any other reason, company can use the best option that is called as buyback of shares. Okay, so these are the some objectives, and depending on these objectives, buyback of shares is undertaken. Okay, now we have to learn the benefits of buyback of shares. So in the case of buyback of shares, it leads some benefits to the company. Okay, the share capital structure can be reorganized securely. So buyback of shares may enable the company to restructure their capital as per their convenience. Okay. Second, the return on capital, earning per share, net profitability can be improved by using method of buyback of shares. And even the company can increase its regular dividend by using buyback of shares. In the case of buyback of shares, if some shares got back from the shareholders, the remaining shareholders are happy because of regular dividend and increasing share value in the long run. So this is the important benefit from the company's point of view. Buyback of shares also enables the company to control over the entire activity of business. So in such a case, existing promoters or management can keep their control on the company due to less shares available for sale in the market. Okay. The next point, that is continuation of existing business plans. Normally, existing business plans and policies can continue without outside interference if company use the buyback of shares. This will enable the company to continue their existing business plan for the long run. Another benefit, that is investors can get the amount of their shares always at higher price. Okay. So in the case of buyback of shares, the company, investors, stakeholders may get number of benefits like it helps family rearrangement, partition, even it enables the company to buy out discontent shareholders or employee shareholding when the employment ceases. So these are the some benefits which company can get by using the method of buyback of shares. Okay, so dear students, there are some legal provisions that are to be considered while maintaining the records of buyback of shares. Okay, so in the case of buyback of shares, first of all, we have to consider about sources of funds. So as per section 68 subsection 1 of Companies Act 2013, the sources of funds can be created for buyback of shares. So according to this section, company may purchase its own share or other specified securities out of its free reserve, security premium account, or any proceeds of any share or other specified securities. Okay. So there must be a proper rearrangement of sources of funds for buyback of shares. Okay. Second provision is about authorization. As per section 68 subsection 2 of Companies Act 2013, the company may create some authorization in the case of articles of association, board of directors, shareholders, okay, and some explanatory statements. So there should be a proper rearrangement. So the primary requirement in the case of authorization is that article of association of the company should authorize buyback. In such case, a provision is not available. It would be necessary to alter the article of association to authorize buyback. So, for the purpose of buyback of share, there should be an alteration in article of association. Okay. And board of directors can approve buyback up to 10% of the total paid up equity capital and free reserve of the company. And in the case of shareholders, shareholders by a special resolution can approve buyback up to 25% of the total paid up capital. These are the some provisions with relation to authorization of buyback of shares. Okay. Third provision about fully paid shares are to be bought back. Normally, only fully paid shares are bought back. So, company need to consider this provision while adopting buyback of shares. Okay. Fourth provision is about post buyback dates and equity ratio. So, in the case of post buyback date equity ratio, it should not exceed 2:1. So the ratio of the aggregate of secured and unsecured debt owned by the company after buyback is not more than twice the paid up capital and its free reserve. However, the central government may order or notify higher ratio of the debt to capital and free reserve for class or classes of companies. Okay. Next provision is about time gap. Means time gap between two buybacks. So as per the section 68 subsection 2, no offer of buyback under section 62 shall be made within a period of 1 year, reckoned from the date of the closure of the preceding offer of the buyback. So the time gap between two buybacks is 1 year. Okay. Next provision about explanatory statement. As per section 68 subsection 3 of Companies Act 2013, the notice of the meeting at which the special resolution is proposed to be passed shall be accompanied by explanatory statement. So normally, in the notice of buyback, company need to explain or mention some statements like a full and complete disclosure of material facts. It must be mentioned the necessity for the buyback, the class of shares or securities intended to be purchased under buyback, and the amount to be invested under the buyback, and also the time limit for completion of buyback. These are the some extraordinary statements that must be mentioned in the procedure of buyback while adopting this method. Okay. Then time limit means time limit for completion of buyback. It must be mentioned in explanatory statement, and every buyback shall be completed within a period of 1 year from the date of passing of the special resolution. So, in short, what about time limit for buyback? Any buyback must be completed within 1 year. Okay, these are the provisions. Next, method of buyback. So normally, the buyback may be from the existing shareholders or security shareholders or from the open market or by purchasing the securities issued to employees of the company. So there are many methods of buyback of share. The company can make use suitable method as per their convenience. Okay, so these are the some legal provisions that are to be considered while using the method of buyback of share. Dear students, now we are going to learn some conditions of buyback if offer price given. Okay, so in the case of buyback of share, so there are many methods of buyback. So for example, if offer price given, so in that case there are some conditions. Means we have to calculate some amount as per the provisions of Companies Act 2013 for the purpose of buyback of shares if offer price is given. Okay, so in this case, first of all, we have to calculate the amount of sources available for buyback of shares. Okay, so for generation of sources for buyback, we have to consider whatever general reserve company is having, profit and loss account, and security premium account balance is having. So, aggregate of all these reserves, profit and loss account, and security premium is called as sources. Okay, so normally it is called as reserve and surplus account, and that is to be used for buyback of shares if offer price is given for the purpose of buyback. Okay, then we have to calculate 25% of own fund. So first of all, we need to find out the total amount of own fund, and then we have to consider 25% amount of that own fund for the purpose of buyback. So own fund is to be calculated by aggregating the amount of reserve and surplus, equity capital, and preference capital. The aggregate of all these called as own fund, and we have to take 25% amount of own fund for the purpose of buyback of share. Okay. Next condition, in same case, that is if offer price is given, then in third step we have to find out the amount of minimum own fund, and amount of minimum own fund is to be calculated by taking into consideration the full amount of own fund minus 50% of debt. Means whatever debt like debentures, long-term loans from banks and other institutions are there. So whatever debt company is having, the 50% of that debt is to be deducted from the own fund for the purpose of calculation of minimum own fund. And determination of minimum own fund is must while using the method of buyback of shares. In fourth stage, we have to calculate 25% amount of paid up capital. Okay, so in the case of 25% of paid up capital, we have to consider maximum number of shares as well as offer price given. Okay, the buyback of offer price is calculated as the maximum number of shares multiplied by offer price given. Okay, and in the last stage, we have to determine maximum possible amount of buyback of shares by considering least amount of the above fourth, that is sources which we created for buyback, 25% of own fund, minimum own fund, and 25% of paid up capital. So least from these four is to be considered as a maximum possible amount of buyback. So dear students, this is the simple format for the purpose of calculation of maximum possible amount of buyback if offer price is given. Okay, now we have to understand the entire accounting procedure of buyback of shares. Okay, so in the case of buyback of shares, first of all we have to record some accounting transactions about sources of buyback. So the first transaction, that is about procedure of earlier specific issue of preference shares. It means if company created any source for the purpose of buyback by issue of earlier issue of shares or preference shares, so that should be recorded properly. So the entry for earlier specific issue of preference shares will be bank account debit to preference share capital account. So it is the normal entry which we have been recorded into the books of accounts if any shares or preference shares issued to the public. Okay. Second transaction, if any sale of asset or investment is undertaken in the company during the procedure of buyback, that should be also recorded in the books of account properly. So entry will be passed like bank account debit to asset or investment account. Okay, to preferential capital account. So the contra entry for sale of asset or investment is bank account debit to asset of the investment account to preferential capital account. The third transaction that is to be recorded on buyback of shares is amount payable on buyback. So whatever amount payable on buyback is to be recorded properly. So entry will be equity share capital account debit, premium on buyback of shares account debit to equity shareholders account. So this is the entry, accounting entry for amount payable or due on buyback of share. Okay. The next transaction, that is creation of free reserve. So if free reserve are transferred on buyback of equity shares, the entry will be passed like profit and loss account debit, security premium account debit to capital redemption reserve account. So normally company need to create CRR, that is called as capital redemption reserve, for the purpose of buyback, and it is to be generally created from the various free reserves available with the company like profit and loss account, security premium. Okay, next transaction, is about payment to shareholders on buyback of shares. So whatever payment which company going to pay to the shareholders on the buyback of shares, the entry will be passed like equity shareholders account debit to bank account. Got it? Next transaction is about premium on buyback adjusted. So this is the last stage of recording the transaction of buyback. So whatever premium is company going to pay to the shareholders on the buyback of shares is to be adjusted, and normally buyback of shares is always taken place at a higher price. Okay, so in such a case, entry will be passed for recording the premium on buyback will be security premium account debit, profit and loss account debit to premium on buyback of shares account. So dear students, this is the entry that is to be recorded properly in the books of account if premium on buyback is adjusted. So when we talk about buyback of shares, we have to consider all the provisions of Companies Act 2013 with relation to buyback and the entire accounting procedure. Okay, thank you.